financial argument. Follow us on YouTube.
Hey everybody, it's me, Gregory Manarino. How are you today? It is Saturday, November 12th, 2016. Very rare for me to do a Saturday video blog, but this has been one incredible week for this market, for the United States, and for the world. And the action that we have been seeing with regard to precious metals, the US dollar, debt, the market has been, frankly, overwhelming. So I want to put a couple things into perspective here and come up with a couple of theories. I've been spending a lot of yesterday and even this morning talking to a lot of people that I know. Some of them work at the biggest banks in the world. I can't mention their names, I can't mention the banks, but that's okay. However, the consensus between all of us seems to be pretty much the same. So I want to share that with you so you can get a better understanding of what's going on. First of all, the election of Donald Trump for the next president of the United States did take pretty much everybody by surprise. And it has caused a tectonic shift with regard to the way the financial institutions are positioning themselves for what is coming, and how they should be allocating capital into certain sectors, commodities, and all kinds of things. So that's why we're seeing a lot of this bizarre action. Again, I had discussed how we saw a lot of cash coming out of the tech sector, going into financials, going into pharma, going into some industrials. We had a commodity smash down yesterday, which was pretty incredible. And this bond market, the bond market is huge, absolutely huge, and we need to talk about that too. In fact, let's start off with that. So we've seen a massive sell-off here in the bond market. This is global, and that could mean a lot of things. Now understand, in the grand scheme of things, the rising bond yields that we're seeing, historically, we're still at incredibly low rates. But it's not the rates themselves that we're worrying about. It's the magnitude of these moves, and it's tremendous. Now, we're starting to see a steepening of the yield curve, which generally is a good thing. When you have a yield curve that is steepening, it's a tell that the economy may pick up moving forward. And I believe that if a President Trump were to implement a lot of his campaign promises, it's very bullish. It's very bullish for the economy and very bullish for the stock market as well. No doubt about it. No doubt about it. But we need to keep our eye on this because these moves are, they're tremendous. And I want you to keep something else in mind, and I think this is important as well. Sometimes you can get technicals, if you're looking at a chart, for example, that looks extremely bullish or extremely bearish, and the absolute opposite happens. That's pretty common, a lot more common than people think. So sometimes a chart that's looking really bullish can be misleading, and the opposite is true as well. So what I want to do here is, again, I took some notes as I was talking to friends of mine. This is what the general consensus seems to be with regard to a bunch of assets, including precious metals. So let's talk about this. With regard to the bond market, I don't think any of us are convinced that the selling is over with regard to the bond market. So what does that mean? It means we're going to see yields move even higher. We could probably see the yield curve get even steeper. Again, in the grand scheme of things, this is good. It's a good tell. But sometimes things can be misleading here. With that said, we also believe, the general consensus, although there was one of my friends who doesn't believe this is true, but that's okay, that the dollar will continue to gain some strength here. This is going to put pressure on commodities, which we've been seeing. There's no doubt about it. Crude oil could continue to move lower. We could continue to see pressure here on precious metals. But that doesn't change the long-term prospects. You understand? It doesn't change a thing. We understand where we are globally. And as far as I'm concerned, and nothing has changed that way. Precious metals is where you need to be. You have to have this in your portfolio. There's no doubt about it. You have to still be betting against the debt because it's going to get even worse globally and become your own central bank, period. I still feel very strongly about that. Some of my friends believe that we are going to see further losses with regard to commodities. Crude oil definitely number one, and precious metals as well in the short run. So don't be surprised if you see this. Further upside in the short run for the stock market. This seems to be the general consensus here of what we can see moving forward in the immediate future. Okay? But that does not mean, again, if we continue to see a massive sell-off here in the bond market, that's not going to put pressure on the stock market. So you need to understand these things. Now, never have I had so many emails before like this week. I don't know, thousands of emails I've gotten. It's shocking. Anyway, that's why I wanted to do this video. I wanted to get this out here. A lot of people are concerned about what's going on here, and you have every right to be. But again, I hope what I've discussed for you has made some sense to you. And again, reaching out to people is always a good thing. It puts a perspective on things. And I wanted to get out what we have here. So let me just go over this again real quick. Notes I was taking during conversations. Oil lower. Bond sell-off will more than likely continue. Yields will continue higher. U.S. dollar getting stronger. Metals will remain under pressure now for a little while, no doubt about it. I have to agree with that too. And we could see some upside still to this market. We could also see, and this is something I spoke about yesterday, a rotation of cash back into some sectors that got punished, like tech, for example, got absolutely punished. So there's so many ways to take advantage of this. It's unbelievable here. So with regard to doing that, if you believe, as I do, that the debt is still in a bubble, nothing's changed with regard to the debt bubble, and this bond market sell-off may be some cracks here in this debt bubble, you should be, again, becoming your own central bank, betting against this debt, taking advantage of this dip in precious metal prices. But also think about this. There's a lot of people who are freaking out about this, but we've had an incredible run this year with regard to precious metals. At the end of last year, I did an interview with Greg Hunter. I said, this year, you will see gold and silver move much higher, and that's exactly what has happened. So you could expect these kinds of things. Now, another thing, keep in mind, with all these institutions and these big banks repositioning their portfolios, we're going to see all kinds of crazy stuff here in the short run. This week, who knows? But again, I went over the general consensus for you from what I'm gathering from some pretty smart people. Anyway, I hope this has made sense to you. Let's see how this rides out moving forward. And pretty much that's it. I will see you on Monday. No more weekend videos for at least this weekend. Over now.